Hello everyone and welcome to my new course that I will share with you valuable information and techniques for raising your wealth in smooth manner. This course will explain you first about wealth and then it will take you through the 7 golden keys of getting to your wealthy destination. The material here is really valuable and if you can apply it in your life then you will feel the results very fast as I did. So, let us start surfing and finding these golden keys to promote our lives. So, answering this question have multiple ways of thoughts and theories, but the one which I really love it is describing it as wealth can expressed in a variety of ways. In a purely material sense, wealth consists of all the real resources under one's control. Financially, net worth is the most common expression of wealth. Therefore, we can say 1. Wealth is an accumulation of valuable economic resources that can be measured in terms of either real goods or money value. 2. Net worth is the most common measure of wealth. 3. The concept of wealth is usually applied only to scarce economic goods, goods that are abundant and free for everyone, provide no basis for relative comparisons across individuals. Here we start by key number 1. If you are a worker, employee, senior employee or a freelancer, you will obviously have a stable or fluctuated income which can be monthly or weekly, and your main concern is to pay your bills at the end of every month. But stop. I have learned a lot from my mentors that rather than paying your bills and then paying yourself, you need to reverse the formula and pay yourself first before paying your bills. How that can happen? Experienced people and wealthy people argue that a person should take out at least 10% of what he gains monthly or weekly and keep them aside. Of course, the more is the better, but 10% is a really good startup for this step. If you are worried about this money and you are more worried about your bills, then you have to sit back and think of your non-important expenses to deduct them. Because you are working day and night and you are taking all the responsibility on your shoulders, then you need to reward yourself and build your future before paying to any other. If you think this is difficult, just try it for a few months and you will feel the difference. I tried it myself and I have taken this 10% to the next steps, as we will explain in the coming minutes. I have trained this step to many of my students and colleagues and they made the difference. But this is not the only thing that you need to do. Saving 10% every month for what? You might ask me this question. The reply will be obvious in the coming minutes, that how can you build a wealth from this 10%? Of course, if you pay yourself more than this amount, that will be great and faster toward the goal. Well, I wish that you have completely understood lesson number 1 and you are ready for the next step toward your wealth destination. Okay, let's begin. Controlling the expenses is a major factor in your life as well in your wealth story to achieve. I know it is not an easy task, but if you are willing to be a wealthy person, then you have to compromise some unnecessary expenditures which can be replaced with doing it by yourself. How this happens? Normally, people used to live their lives and try to enjoy it by spending almost all what they have, and some people goes beyond this for loans and credit cards liability which are non-recoverable, or it will take long time to clear them once they get to be matured enough. Moreover, most of the people, when they start after few years to get a promotion or a new job with higher wages, they promote their lives as well by adding new expenses which were not there originally, or they replace their existing liabilities with new higher ones to accommodate their new standard. But did you know of this? Is this right or wrong? Of course, many of us says that it is totally wrong, but they still keep themselves in the same root of faults, and once they became mature enough they will find themselves sunk of debts. So if you are watching this course, you need to make a full stop after this slides and write down all your expenses and get rid of those who are really unnecessary. I am not saying don't enjoy your life, but enjoy it without putting pressure on your future or throwing yourself in a deep sea where you can't come out of it. Now let us see how the smart people think of their career lives. It is stunning that there are people still think of this, but normally what we are driven to do is because of the society, and many of our expenses are just to show people that we are having money and enjoying our lives. I love the quote says you have family to feed and protect and not people to show them that you have money to enjoy. It is true. Of course, if you don't have a wife and children now, then you will have them one day. So can you imagine the situation where you are in a position to select between promoting your life and keeping your family hungry, or providing your family with comfortable life and making them satisfied? Of course, the second option is more reliable to most of the people that entered and experienced the difficulties of life. What smart people tend to do is that they maintain their current expenses by optimizing their living cost or finding an extra income from somewhere. But what is the most important that they do and normal people don't? Once they are promoted in their jobs or getting a new job role with higher wage, they will ensure to maintain existing expenses or raising a very minimal expense only, and they will start saving the difference. But saving is not the only good part here, because as my mentor says, money kept in bank is trash and no value for it until it makes you new revenue stream. Here is an example that you can see: a smart person with a monthly income of $2,500 and his current expenses around $2,250. You can see that after few years he got promoted or he got a new better opportunity and his wage increased to $3,000, but you can also see that his expenses increased very minimum toward $2,350. In this way, this smart person can save money and can pay more for himself, and he also can split the minimum of 10% to pay himself and go for the next step toward his wealth story. Hello again, my friends. Well done for the serious people who took the subject under consideration for their lives' promotion to get toward their wealth destination. Now, we have talked about optimizing the expenses, and whoever prepared his plan is really moving correctly with our awesome course. We also talked about paying yourself at least 10% of your income, and we will talk now why you need to separate the 10%. Here one of the great people in Babylon taught a lesson to his worker when he took it very seriously, and he became to be the richest man in his country. What you have to do now is to believe in the miracle of compound growth investment that been introduced by Albert Einstein when he said, "Compound interest is the most powerful force in the universe." He said, "Compound interest is the eighth wonder of the world. He who understands it, earns it, he who doesn't, pays it." Who am I to argue with such a smart guy? This is an amazing miracle that is not easy to understand and apply, but nowadays there are many websites and agents working with this method. The basic concept of this miracle is that when you separate your 10% of your income, you need to find the wallet or fund to invest in it, and this money can go to the fund or wallet of investment monthly base, for example like $100 every month, and they enter this amount in investment in mutual funds or buying stocks or bonds or insurance program. Let us have an example. You kept $100 in fund and you add the same amount every month for few years. What will happen? The first 100 will gain some interest and it will be reinvested in the next month, as for example $103 in addition with the monthly payment that will make them $203, which will be invested in the funds again and will grow to 207 or 8 and so on till getting the amount compounded for not less than 5 to 10 years. Then you will sense the real money and gain. Comparing to bank deposit that will pay you around 1 to 2% only per year, compound growth is much beneficial than fixed growth. You can find the difference in the two given chart. The principal amount paid is same for both the periods, but you can see the huge difference while reinvesting your principal again and again. It is now your choice to make, and there are huge potential though online solutions trusted by your country such as through official banks or trusted money agents that can offer you various range of solution for this kind of investment. Of course, don't forget that any investment is not risk-free, but the mutual funds are one of the best ever tested, as it is impacted by small portion of shares if one of the companies enrolled in the fund been, for example, bankrupted. Hello again. I hope that whatever explained earlier was really valuable for you to make a decision and start changing your way of thinking toward building your treasure. If yes, then you need to listen carefully to this part, as it will be a crucial part of this journey. Once you start building your treasure, and making your money working and generating different revenues, then you need to protect this treasure from the eyes. Once you will be known in the market as a successful person, you will be surrounded by interesting people to take your money either for investing it or stealing it in a professional way, and this is really proven, and I tried it myself as well. Therefore, having a solid knowledge of the market and economy is a wealth as well for you in this stage, and all what you need to do then is to ensure that your new investments made by your individual or sharing with others is protected completely by legal aspects, and you need to ensure that you understand the pool that you are entering into when investing. A fact occurred for the richest person in Babylon when he was applying the lessons of his mentor. He reached key 3 safely after 2 failure years, but he knew the reality at time. When first he saved 10% of what he gains, he gave it to his friend who is a traveler and could convince him to buy jewels for him from a nearby city to sell it in his city and grow his wealth, but his friend was a fraud and he took the money equals jewels and brought him jewels made of glass. His mentor told him that he had the money and he did not invest it in something he understand and know, but he was greedy to make more and more, and it was a very smooth for his friend to steal this money easily by playing with words and convincing him to build a big wealth in short time. What happened after 2 years is the most critical point of change that occurred in his life. As he was working in copper to make shields, he invested the money making new shields and renting them or selling them to people, and with this action he expanded his wealth and kept multiplying his money. My lesson in this period of time where so many companies and agents, you cannot guarantee 100% of their proposals, they talk with you to invest your money as you will make the wealth by clicks, and that can be true but only with knowledge and understanding what you actually do. My advice here is to read about the field that you are willing to enter before taking any kind of actions. The potential will always be there, but your steps should be correct. Risk is there always, but the risk multiples as well once your knowledge level is less than others. Hi everyone, and hope that you keep enjoying the course, and also I would like to give you a small bonus at the end of this course, so keep yourself concentrated with me till end. Alright. Someone may ask. Currently, I don't have a family or liabilities to care about it, so can I speed up my way toward making my treasure? The answer will be yes. It is always possible to generate higher revenues than you expect when you inject more money to your investments. Here is the way for both of people those who are having liabilities and cannot save more than 10%, and also for those who can save 20 or 30 or maybe 40% of their income. If you are from the first team and you are unable to save more than 10%, then you can make speed a cycle of investment, such as if you are saving 10% of your income every single month and you are planning to open a small business after 2 years of saving, then instead of waiting till the time to invest your entire money in the project, then you can also use the monthly savings to buy stocks or bonds that can generate you an additional income as well, and your money expected to be at the end of the second year, X, will be X plus 5%. For example, so you will open your new business and you will have a 5% as an extra, then can work as well to generate other revenues along with your business. The same is also applicable with the other team who can save more than 10%, where they can also invest portion of it, which will be higher in this time and could also generate higher revenues margins at the end of the plan period. So, are you now from Team 1 or Team 2? Don't worry, both of the teams are successful in their investments, but the second team will reach the finish line most probably faster. Hi again. Are you considering yourself now in the right direction, or you have some doubts about? Please ask me in the comments and let us have a valuable discussion. Ensuring a future income is the 6th key of wealth making, but how and when? Reaching to this level means that you have already built your empire, but a person can ask up to when I should stop? The answer is so simple, no point to stop on it. The more you generate, the more you like making more and more, but there should be a sustainability lines which can protect you as well from global economics bankruptcy. As you all sensed and saw during COVID-19 period, many companies around the world closed and shut down because they cannot handle more expenses while they are not operating. But did all of these business owners went bankrupt? The answer is no, of course, but how? Smart investors takes portion of their wealth cake and invest it in more stable fields. So if the stock market goes down or service sector stopped, then they have a backbone support from real estates or bonds or maybe insurance programs. So you need to diversify your income and not to rely only on your business, as there are waves rising and falling and nothing can stay stable for long. Suggestion that when you reach to a level that your money works for you, then invest some portion of it in buying low-risk bonds, buying insurance investment policy, or buying real estate units that can generate additional money for you in long run and also can handle its own value in it. So now, what fields that you suggest to go with it to sustain your wealth? The last key of our course is being wisdom. How is that, and how can this benefit you in your journey? If you read and search about most successful people, you will find that they learn from each fail and they keep learning from making mistakes. But some people may comment on these people who keeps failing by saying, "Watch to this stupid person, he is not learning from his faults." But the truth is that they are building a knowledge from these fails and they build their wisdom treasure as well. When you meet someone old in age or a successful business person, and when you ask him to teach you something, he will probably give you a singe statement or a one-line lesson that he learned it from his years, and these statements are really valuable assets for you, as these statements generated from years and years of fails and difficulties. So whenever you are on the right direction, don't stop from the first fail, but stand up and take the second and third and even the 100 ride and keep trying. Thomas Edison failed thousands of times, but he clearly said, "I did not failed. I found 10,000 ways that will not work." Other successful people also did and said the same after their fails. The lesson is that if these people gave up from the first few fails, then we should be now living in maybe 1600 style, as the power will not be invented and the phones were not invented and airplanes were not invented. Some people may say, if Edison didn't invented the electricity, then other may invented. Yes, correct, but who knows when the life give you a person who can say the above lesson to everyone. His lesson stated above was power for other successful people who invented other interesting things. This was a trigger for many and many of nice invents. So the conclusion here is, keep learning and don't give up ever. The bright day will come sure. Hello there in our bonus session. This bonus will show and classify you the types of global available investments and their risk. So let us start explaining them one by one and wish that this will be valuable for your journey toward your wealth. 1. Bank's fixed deposit is the most lower in return and lower in risk. Its return is some number between 1 to 3% by holding your capital amount for not less than 1 year. 2. Government bonds is the second in hierarchy in return and second higher in risk, and it goes between 2 to 4% by holding your investment amount for not less than 3 to 5 years. 3. Senior bonds is the next stage in return and risk, and it depends between countries to give around 3 to 6% by holding your investment amount for not less than 3 to 5 years and sometimes goes to 7 to 10 years. 4. Insurance investment policy is available through well-known insurance companies, and its beauty is that it is using compound growth that needs you to pay a fixed premium monthly or quarterly or annually based to get returns of 4 to 7% with very good risk management, as it will give the beneficiary the total gained amount at the end of policy period, and it provides also a life insurance for policyholders' family. 5. Mutual funds. It is almost the same concept of the previous type, but the return here is high, between 5 to 15%, and the risk also is higher as well. Commodities also is a good place to invest with very high returns, goes 6 to 20%. Equities is a long-run investment where you buy stocks in specific company and keep buying it for long to build your portfolio with them. Some people reach to be a member of board through buying the stocks for a long time, and the returns are various depending on company's performance. Forex market trading is the higher investment in the hierarchy with huge returns, goes to 30 to 70% and sometimes toward double, but you have to be aware that this market is never gets stable and it is controlled by big sharks that can change the direction is microseconds and you will lose all your investment. So entering Forex market needs a solid learning and understanding about the market and the strategies in order to set up your own strategy. So here my friends, we come to the end of this course and I wish that it was nice and smooth with many valuable information and lessons that can take you to next level. Have a nice journey and please keep your eyes on your investments. Goodbye and see you soon with new courses.